Hi friends, Infosys shares have seen significant declines over the past month, dropping nearly 10% in 30 days. Amid this turbulence, analysts at Bank of America Securities upgraded the stock from neutral to buy, anticipating a 2025 revival in the IT sector. They also raised the target price from 1735 to 1785. Following this upgrade, the stock rose 2.5% this week, although it fell back to its previous lows by the week's end yesterday. Yesterday, Infi closed at 1484. The Bank of America upgrade precedes Infosys' quarterly earnings announcement scheduled for 18th of this month. During this earnings call, the firm is also expected to provide their outlook for fiscal year 2025. In this video, we will go through each of the reasons why the Bank of America expects Infosys to make a case for early recovery of its IT business in calendar year 2025 and see if what they say makes sense. We will also discuss in detail whether other analysts and the market agree with their assessment. Bank of America cited 4 reasons for their optimistic outlook on Infi for fiscal year 2025. First reason mentioned is normalization of post-COVID spike in IT spends expected by mid-calendar year 2024. IT services saw a surge in spending post-pandemic. This was probably fueled by the need for digital transformation and remote work infrastructure during the COVID era. Bank of America felt this surge in IT spend is expected to return to its normal pre-pandemic levels around Q2 of fiscal year 2025. Second reason for the upgrade cited by Bank of America is meeting Basel III requirements is expected to drive up regulatory tech spends by banks. Let us take a closer look at this since it's a very important point made by Bank of America analysts. Many banks continue to invest in IT infrastructure to meet the regulatory requirements like the Basel III requirements. Basel III stipulates more stringent capital requirements, risk management standards, and introduced new requirements for liquidity and debt like the liquid coverage ratio or the LCR. Accordingly, the banks are expected to allocate required funds for upgrading their IT infrastructure for risk assessment, reporting, and compliance management. Bank of America felt this potentially benefits the IT companies like Infosys. However, it's important to note that the implementation of Basel III by US banks began way back in 2014 and was expected to be completed by early 2019. Major parts of the Basel III are already in place worldwide, including the US. However, the Basel III is an evolutionary framework. The final changes for Basel III, called the Basel III Endgame, which was agreed upon in 2017, have been delayed for years now. This is due to COVID-19 pandemic and the banks calling for more time to adjust to and lobby against the new regulations. Deadlines have come and gone with mid-2025, the latest date when the rules are supposed to go into effect in the US. The US banks will technically start complying with the new regulations in July 2025. However, they will have a 3-year grace period to fully implement them till June 30th, 2028. This phased approach allows banks to adjust their operations, technology, and data systems to meet the stricter capital requirements under Basel III Endgame. So the expectation is that US banks will need services of IT companies to meet their regulatory requirements at least till mid-2028. However, do note that the general outlook on the BFSI, that is, the banking, financial services, and insurance sector reviving the IT services business, at least in the near term, is quite gloomy. With TCS yesterday in their earnings call reporting a 3.2% drop in Q4 revenue from the BFSI sector, the Bank of America's forecast for a banking project uptick may seem too optimistic. Remember, last quarter Infi reported a 6% revenue decline in BFSI compared to TCS' 3% decrease in Q3. Given these figures, it is uncertain whether Infosys' Q4 performance in BFSI will be any better than what TCS could manage. So stay tuned for the earnings call on April 18th, where more details will likely be shared. Remember, for both TCS and Infosys, BFSI remains their largest vertical. However, TCS chief Kriti Vasan did say yesterday, we are seeing weakness in the BFSI sector nearing its bottom, which suggests that a revival could be on the cards. But it's too early to say if we are there yet. Third reason cited by Bank of America for the upgrade is SAP upgrade deadline becoming more of a priority for enterprises amidst the 2027 support deadline. SAP, the leading ERP software provider, has announced end of life of their legacy version of SAP, namely SAP ECC, by 2027. All businesses on this system must migrate to the newer, more modern SAP S4 HANA system to receive support, updates, and to leverage new features and performance benefits of SAP S4 HANA. Currently, less than 30% of the existing SAP ECC deployments are migrated to the newer version of SAP. Infosys is one of the leaders in SAP migration services. Hence, it stands to benefit from the possible last mile rush by these firms to meet the deadline set by SAP to upgrade the installations driven by older version of the software. Fourth reason given is transformational IT spends could see an uptick post US elections. Since economic and regulatory hurdles tend to clear post elections, Bank of America expects firms to plan their IT investments with more confidence. The new government may kickstart pending projects in sectors like healthcare, finance, and energy, potentially benefiting IT companies like Infosys. Given that shares of Infosys have underperformed the Nifty by 8% since the start of 2024, by 25% from Jan 2023, and by a whopping 46% since the start of 2022, Bank of America analysts argued that the current valuation of Infosys stock justifies their decision to upgrade it to a buy rating. The substantial underperformance over these periods suggests that Infosys might now be undervalued relative to its market potential. Hence, this is a compelling investment opportunity according to the Bank of America analysts. The stock's lower relative price could offer upside potential as market conditions or company performance improve. The analyst suggests that the expectation for the revenue growth of calendar year 2024 or fiscal year 2025 have adjusted to around 5% and the EBITDA margin may remain flat. This is influenced by Accenture's recent results. We will revisit Accenture's recent earnings update later in the video. The analysts believe the upcoming earnings and guidance might mark a turning point for earnings expectations, considering 1. 2% tailwind from mega deals already secured by Infosys, and 2. Low risk of significant reductions in discretionary spending by its clients. This scenario points to a potential stable or improved financial outlook for the calendar year 2024 or fiscal year 2025, according to analysts. So, given this position of Bank of America securities, what is our take on Infosys and its stock price? Will Infosys really rebound? What is the market mood and opinions of other brokerage firms on the IT giant? Let's find out. Before we go overboard over the upgrade, let us try to see general mood and analyst take on the growth prospects of the firm for fiscal year 2025. General analyst consensus is that IT sector will take another year to recover, earliest by later half of FY25. The recent update from Accenture on the revenues weighs large on the investors. Accenture cut its revenue forecast for fiscal year 2024 to 3% from 5% earlier estimated. They reported a 6% drop in revenue from its financial services business to $2.8 billion. The quarter 3 fiscal year 2024 performance of Infosys, reported in December, seems to reinforce this pessimistic outlook. During the third quarter, that is quarter 3 fiscal year 2024, Infosys reported a consolidated net profit of Rs 6,106 crores for the quarter ended December, which was down 7% year over year from quarter 3 fiscal year 2023. Revenue from operations during the third quarter rose by just 1% to 38,821 crores compared with the corresponding quarter of the last year. The earnings estimate for Infosys by the analysts for the last quarter, that is quarter 4 fiscal year 2024, does not look any better. In the quarter 4 fiscal year 2024, the company is likely to report a full year, that is fiscal year 2024, growth of 1.5% to 2% in the constant currency. However, the quarter over quarter revenue growth in quarter 4 for many IT giants, including Infosys, are expected to be negative, around 0.5%. So the Infosys quarter 4 revenue is expected to be even lower than that reported in quarter 3. Only HCL Tech and TCS are expected to post a positive quarter of 1% or lower. However, with hopes of demand recovery and fiscal year 2025, annual guidance or growth outlook for fiscal year 2025 can be in the range of 2 to 5% for Infi and slightly better 4 to 6% for HCL Tech, according to analysts. In summary, as one observer puts it, no near-term magic is expected from the company. TCS earnings report yesterday did not offer revenue growth guidance either. CEO Kriti Vasan, however, did say that fiscal year 2025 should be a better year, even though it is too early to call by when stronger growth returns. So the big question is, can we expect the Infy stock to rebound in near future? Note that the Infy stock is currently trading at a forward PE of 22 or 23 based on fiscal year 2025 earnings estimates. This is at a steep discount compared to TCS, which has a forward PE of 27-28 and is also lower than HCL Tech's forward PE of 24, suggesting that Infosys stock may be undervalued. Additionally, any potentially disappointing guidance for fiscal year 2025 growth might already be reflected in the stock price. We note this because since first week of March, the share price has fallen by 10%. This decline suggests that expectations are already low and some disappointment is already accounted for in the stock price. Yesterday's TCS annual report brought some positive news, including the highest ever order book and profits with margins that exceeded expectations. If Infosys can deliver similar good news and offer a slightly optimistic outlook for fiscal year 2025, it's possible that the stock price could rise. That's it folks for today. We'll catch up with you in the next video. Thanks for watching. Have a great day.